All right, good afternoon, everybody. It's Sunday, 11:30 a.m., August 9th. I got Faisal here on the call with me. We're going to do your Sunday equities breakdown of the market. We focus on the US stock market specifically. We focus on the bond markets and the Forex markets as well. But Faisal's specialty is the US stock market, and he's been doing a tremendous job. If you are not aware of our Alpha Trades community, this is our Discord channel, as you can see. Both Faisal and I are pretty active pretty much every single day of the week. We do take Saturdays and Sundays off to enjoy our lives. But other than that, through the week, Faisal is very active in these channels, as you can see. We have live equity updates. Just this Friday, he put out a ton of information about a lot of tech stocks, some value stocks. So make sure you guys check out that video. It's going to be in your top right-hand corner, and you can click on that. Until then, let's get started on what we have going for the week ahead. Welcome, Faisal.
Hey man, how's it going?
Man, it's been a heck of a week in the market, right?
Yeah, it was definitely a changing of the tide in terms of what seems to be doing well is now uh, at risk of pulling back even harder. And I'm speaking on tech and high growth, and then the value sectors, energy, financials, REITs. What else was there? Industrials, yeah, they all look like they are primed to just see kind of the same type of rally that they saw in the beginning of June, where they ended up going like, what was it, 15% in 2 weeks, 20% in 2 weeks, just had an insane run. Yeah, exactly that. I think we could potentially see something like that over the next 2 weeks. And, while when we did have that last explosion to the upside, tech did not pull back. For instance, the rotation that we've been seeing in the short term is that when tech has a great day, value usually drags down. But in that last cycle, tech actually remained flat to slightly up, whereas the value sectors just sprung up like crazy. So this is going to be a little bit different. I think you may get a tech pullback if we see breakthroughs come Monday. Like we'll definitely know Monday, latest Tuesday, whether or not these tech stocks are going to hold up. So yeah, it's going to be very interesting because if you start to see that significant pull down in the tech sector, money could rush even faster into these value sectors than the last upcycle that we had 2 months ago. So, it's going to be really exciting over the next 2 weeks. I've been positioned in value for, I don't know, like 2 weeks, and I've been really getting tired of it, but I haven't let go of my theory yet. So I'm really excited for the next 2 weeks. I hope it's going to be great.
Yeah, I think, just to give Faisal credit here for our viewers, if you actually read his updates, Faisal has been pretty spot on about, tech potentially um, getting that exhaustion or wind of exhaustion, rotations into value, like financials, industrials, energy. So, kudos on that. Now, can you explain to our viewers, first of all, what exactly is a rotation when it comes down into the market, and how do you spot it?
So that's a great question. A rotation is basically money moving out of one sector and into another. And you kind of saw this rotation happen. So when we had the first big crash in mid March or whatever, that basically set everything flat. Everything came down tech, blah, 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 blah. Everything ended up doing bad. And then you had the first initial bounce, which went up. Then you had a rotation out of the more value oriented assets, or the assets that were definitely the most affected, like the airlines or the cruises by the virus. You had money move out of those assets and into tech. And that was a rotation that we saw at the beginning of last quarter to the end of last quarter, where software was a safety trade, tech was a safety trade. Big cap companies like Amazon, Tesla, if you had some niche advantage or something, some innovation advantage, you saw your premium spike like crazy. Um, People were willing to pay up for anything, and that was a type of rotation out of just the broad market, because I think the sell off was just unprecedented. So out of the broad market and into more tech and safe names. Now, I will say this rotation that's coming up, I think people have been talking. I had definitely talked about it in the last upcycle when we had those 2 weeks of really nice gains, and I thought that that would have been permanent. But as we've seen with these type of rotational patterns, they can very well be short term, and I think that's because the risks relating to the virus are still ongoing. And I think as more time passes, we ended up getting either more clarity and then taking a step back, whether it's reopening too soon or the virus cases spiking, or just things are not as smooth as we want them to be, but we're trying to operate the economy as if everything is smooth. So these rotations, I still don't know. For instance, like I really think the next 2 weeks are going to be great for value, but I don't know how long it's going to last. I'm not here to say that now is the time to completely sell out of all tech and don't be in it until the rest of the year or even next year because they're so extended. No, I think they have the capacity to get even more extended, break the highs that they had last week, but they have to pull back at some point. And then that's where the mystery is once they do end up pulling back and you have this value sector rally, what ends up happening? Do value sectors end up going back up? Do we see a broad market rally and just an explosion to the upside? That is what remains to be seen. But as of right now, when someone asks me what is a rotation in this type of market, that's basically what it is. It's just split up into two groups: tech and high growth, and then broad value. And so, just basically what we've seen: money moves out of one and into another. So that's basically what a rotation is, in my opinion.
Perfect. I think that's a solid summary. Um, I want to move on to this quote by Bank of America. I mean, we've spoken about this a little bit too, where everything comes down to in the market currently what the Fed is doing, whether it's providing liquidity for the market, bank asset purchases, etc. Right? And so their quote was really startling. And for our viewers, you can go check this out on my Twitter feed, Alpha Trades, right here. First of all, what do you think of this tweet, and do you think it rings true? Do you think nowadays the only thing that matters is Fed stimulus, Fed liquidity, and do valuations or fundamental research just fall to the wayside?
Yeah, it's essentially you kind of have this sort of bubble talk, um, and it's so weird because it's not like the stocks that the Fed is buying the most are seeing well, actually, some of them are like Apple and stuff, but not every stock that the Fed is buying is seeing this sort of um, inflated valuation. Um, I just don't. I don't like when I hear talk like that because it makes it seem like everything is euphoric. But once again, the Fed is doing unprecedented things in a time where we could see the fastest bounce back to an economy because it was just, we are going to get through this virus and things will get back to normal. Um, from a business standard standpoint, like I think obviously there's going to be a lot of permanent jobs lost, but I think we will see those jobs being made up over the next 2 to 3 years. And the businesses that do well will end up accelerating even more, and they're the ones that account for a lot of the GDP. So I think, yeah, it's very important. And while that talk is really bubbly, it's also right. The worst thing to do is try and fight the Fed, especially when they're saying we are going to do everything we can to save this economy and make sure it doesn't roll over.
Yeah, I could totally agree with that. It just seems like we're in these times where up is down and down is up. You know, uh, there definitely is a lot of euphoria in the market, in my opinion. The whole notion of every person talking about the market never really goes down or stocks get bought up, that is the definition of a bubble. And I would say, it would be unwise for anyone to think that we're not in a bubble, because I don't think anyone thinks that the market is capable of going down right now, right? That's the actual psychology of what happens behind a bubble, no?
I seriously feel like that. For me, I've tried to short a couple of times, and most of my shorts have been okay. But honestly, whenever I'm shorting and I see the market go up, like my shorts usually do good, even when the market goes up. But I'm always in awe at just how strong this market is, even when it looks weak. It never looks weak for long, and it's like, man, if you're betting against, like if you're buying S&P short or something like that, um, that's been a sad trade, and it just feels like it'll never end. The pain will never end. but I think the bubble is sort of popping right now. The valuations in a lot of these high growth stocks, like Fastly and Livongo, especially, it was it was definitely crazy. And I think people thought that just because you had game changing technology, you should be, and it may not even be game changing. Actually, I haven't even done that much research into both of them, but I definitely know their valuation metrics compared to other growth stocks. And man, they better be game changing because they're just trading at such a high premium. But now we've seen them pull back, I think, like 20, 30% last week. And I still see people buying them. And it's like, why are you continuously trying to buy something where, like, on the first day, I think there were a ton of people on Twitter that I saw that were buying Livongo after the merger deal. Like, and then people were like, no, no, this is a great deal, great deal. In the end, the market doesn't care whether or not it's a good deal or not, especially now, it doesn't care. It may be a good deal down the line, but that doesn't mean it's going to be priced in at that moment. And that goes back to what you're saying, where people just feel like stocks can only go up. And if they get like some 20% pullback, it should immediately be bought, regardless of what you think. And I'm just here to say that's, in my opinion, that's not how the market will operate. And for those who are in stocks like Livongo and Fastly, thinking you got a discount, buying it at 30% from its high, get ready because I think it's going to go down even more so, especially if you see tech like Apple and Coop start to break come Monday, Tuesday. Oh yeah, you're looking at maybe 60 to 7% from its high before it starts to bottom out. But once again, it's just that notion that you can buy something on a dip and it has to go up. You know?
Yeah, yeah, I agree. Um, Fassel's been talking about Fastly, Livongo, some stocks like Okta for the last several days. I'm going to put up the video in your top right. So make sure y'all click on that. It was a video from last week. And you will see, Fassel effectively calling tops or mentioning that we might be overextended in the tech side of the market. Now, I want to move on to the dollar. Okay. I find our predicament that we're in, the dollar, to be quite fascinating because we want the dollar to be the global reserve currency. And technically, I mean, it definitely is, right? 79.5% of global trade is actually conducted in US dollar. This is as per the most recent SWIFT report. Yet, it helps us trade better with other countries when the dollar is a little bit weaker. Not only that, when the dollar is a little bit weaker, I think investors and asset managers feel a little bit better that they want to be able to take advantage in the equity side of the market or FX trades or commodities trades, gold, silver, all these things do better when the dollar is getting weaker. First of all, I mean, what do you make of that sort of correlation? And, do you think that the dollar is going to get weaker and weaker from here? Or are there specific key markers that you're looking for? Because I have 91 as my next big marker below, and then way the heck down here around 88.5.
Yeah. So I'm not a currency guy, and I'll be honest, I really don't look at a lot of the technicals relating to the dollar, but just based off what you said, yeah, those seem like very solid support levels. I would say maybe around 92.5 would also be one. But fundamentally, I don't know what's going to drive this thing now. I really don't know where it's going to go. I wish I could give y'all a better read on the dollar, but as you were saying before, as long as the dollar continues to stay lower, relatively lower than where it was in maybe 2018. Like, I mean, right now it's relatively low. It hasn't been this low since the trade war, actually, in 2018.
Mm-hmm.
So it is relatively low, and I think people, if you don't know how much a low dollar increases profitability of a lot of these international companies, you got to do your research, because if you do have an internationally based company or have a huge exposure internationally, having a low dollar is just, it's as good as having low interest rates in terms of just how much it means to a stock. And I think I've talked about these stocks before: Medtronic, Boston Scientific, 3M. A lot of the value stocks have international exposure, and those are just the ones that I'm in. But they're going to see so much increased profitability just from a low dollar. So if you can find companies that are not only exposed internationally but also have innovation, like I said, Medtronic and Boston Scientific, BSX. That's one that I'm currently in now, and both of them are very innovative companies that are in the medical device space. They're very big companies, but they should continue to see not only product innovation but increased profitability as a result of a low dollar. Plus, they got low interest rates too. So all these things mixing together, these are kind of the core components that I'm looking for the next half year to next 2 years. This is kind of the criteria that I'm adding into my formula as to what do I want to invest in over the next 1 to 2 years. And that's why I keep saying these stocks like McDonald's, Yum Brands is another one, YUM. Uh, these stocks are just heavily, heavily undervalued. Actually, you know what? I don't know if Yum doesn't have its China assets anymore, right? That's YUMC, YUMC. Anyways, I don't know. I don't know how that works. I gotta check it out. But definitely McDonald's. These companies that are at the forefront of increasing profitability, not only through the dollar, but through things like automation and an integration of different technology, like what we're seeing in these fast food chains. I mean, these companies have so much ceiling, in my opinion, and they're trading at such amazing valuations if you're looking 1 to 2 year down the road. So keep an eye out for those. I think you're going to get some great opportunities that are going to start pricing in that low dollar effect probably sometime within this year. And you'll see stocks like McDonald's and Boston Scientific do absolutely phenomenal over the next 1 to 2 years. I could definitely bet on that.
Solid stuff. So for our viewers, make sure y'all pay attention to some of these stocks. We also have Medium articles that we write. And all the information that we have in these videos are converted into those articles. So make sure y'all go check out Alpha Trades on Medium. Now, Faisal, what are you looking for the week ahead? What should we be looking at as traders and investors in the U.S. stock market?
Well, okay. So my number one stock, I already touched on it on Friday, but EverQuote, EVER. Just to remind y'all, this is my biggest position right now. Personally, I'll go ahead and disclose that. I totally believe in the long term view of the company. It got whacked on its earnings after it missed on the top and bottom line, but I still think that this company is in just very prime capacity to accelerate its business on both its advertising side and its quote side. As COVID continues to restrict people from going out and seeing insurance agents in person, I think a lot of the channels are moving more so to online. And even if they end up being slightly affected by COVID down the line, I think this company has such a broad and great technology and wingspan that someone is going to acquire them. Now, that's just my personal opinion, but don't go on that. But that's definitely how highly I view this company. But on a more broad sense, why I mentioned EverQuote, definitely watch the insurance companies. I also mentioned that Friday too. So I did some work over the weekend, and definitely my favorite name is Allstate. I also mentioned that 2-3 weeks ago that I thought it was my favorite one, but they just reported recently. I checked out everything, and Allstate still looks like, I think, the best value in the big insurance space. So that may be a company that I'm looking to get into sometime early this week as we continue to see this rotation into value, because I think everyone, when we talk about financials, especially myself, I like to mention the big banks as being the face of the financial sector. But I think insurance, once again, we are going to enter into this golden age of insurance where people are not going to get into as many accidents. And I think you kind of saw that in what Progressive said on their report, their I forgot what it was, but they did not have to pay out as much. And it was like a record year in terms of payouts for that company, and that company has just skyrocketed to all-time highs. But I think you're going to see that across the board as people continue to stay in and stay sheltered and not go out as much. That in turn reduces the risk for any type of accident to happen. And so Allstate and these insurance companies, I think they're going to definitely price that in, and the estimates look pretty good too. So that sector is definitely one that I'm watching along with the banks. As I was mentioning before at the beginning of the video, tech, I'm watching to see if Coop breaks down, if Fastly breaks down. We can go ahead and pull that up. So you see it's kind of like at that triple top base. If it breaks down below that, where it had that big red candle, yeah. If it breaks down below there, it could probably go somewhere down to 200 within this week. And that's a 90-point drop. And I would not be surprised if it drops 90 points in a week. because the type of unity that we're seeing amongst the high growth stocks is very, very powerful. And I think when you have that unity, it's kind of like a massive profit taking cycle. And at that point, no one is safe, and it'll be just profit taking at an extremely high rate. So once again, I'm watching for that, but I'll also be making a list of my growth stocks that I want to get into once this pullback is over. So keep on the lookout for that. And lastly,
Again, and you're going to put that in the advantage side, the top growth stocks?
yeah, I'm definitely going to update that. I think the growth stocks, I kind of have to cycle them out. They've been there for around maybe 2 months or so, and I think as new leaders have come up, it's probably best that I do a revamping of those growth stocks.
Perfect. So, Faisal, what is the final note that we should leave our viewers with before we wrap this up?
Don't be afraid of the market. If you see the headlines down, do not shy away. Because as we've seen before, even when value has done bad and tech has done awesome, you look at the headline numbers like the S&P and the Dow, they're all up. And I think you're going to start seeing that change a little bit as tech starts to pull back and really drags down the indexes. But these value sectors will go up to an extent that you won't see the Dow drop maybe 500, 600 points, but it'll be down 200, and tech will be down 3%. You'll be like, oh my God, this market is coming down. The end is near. But you'll have sectors like value, utilities, REITs, and all those other sectors do quite well over that span. So don't look at the headline numbers. Take a look at those ETFs that we've talked about: XLF, XLE, XLI. Those are the value sector ETFs. And then try and take a look at XLK, SKYY, and maybe ARKK for the growth side of the market. So pay attention to those more so than the indexes, at least this week.
Okay, perfect. I think we've given our viewers a lot of information from the macro to the micro, what stocks to look at, what industries to focus on, like insurance, maybe even pay attention to tech, potentially selling off going into the week. So if there's nothing else, Faisal, we'll wrap it up here.
All right, man. No, I'm good. That sounds good.
Perfect. Well, again, guys, thank you so much for watching. Hit the thumbs up if you do enjoy our content. Leave us a comment. You can now go on the new Cryptosomniac website, just FYI. It is up, thealphatrades.com, and you can sign up here, hit the products page, and you can buy a membership for $97 per month. With that, right here, Advantage membership, and with that, you get access to everything. We don't have a tiered membership. You can trade crypto, you can trade equities with us, and you can trade options with us. So $97 per month. Sign up right here on the Alpha Trades website, and I'll see y'all next week. Cheers, and have a good rest of your week.
Peace.